What's going on, everyone? I went back to 1960 for this data. I included the 1970s era when inflation was very, very prevalent, similar to today. And I'm going to share what I found. All right, so we're going to talk about that. We're going to talk about the overall markets and the crypto markets. So without further ado, let's get started with the video. So out of close to 20 times, going back all the way to 1960, there has been only 3 times in history where we do not retest at least close to the equivalent of 379 on the SPY within 2 trading days. So there's only been 3 instances where, so for example, today's, when we fell like this, it was Monday, all right? This candle right here is Tuesday. And Wednesday, obviously, is the 3rd day. So it's the 2nd trading day afterward. There's only been 3 instances out of close to 20 in the past, since 1960, where we do not retest back to 379. What ends up happening in those 3 instances is we end up retesting it within 6 trading days. So it would end up happening next week. So literally in history, every single time we've overextended this much in history, every single crash, every single terrible market downturn, everything, we have 100% of the time bounced back to basically the equivalent of 379. So if this time it doesn't work out, that's fine, because this is literally, it's one of the highest probability trades that I've actually seen, and it's a very, very high quality trade. So if it doesn't work out, it doesn't work out, but we're not trading anomalies, because if we were basically betting against this and we were going short and we weren't going long, then we would be betting on a statistical anomaly. We'd be betting that something that worked 100% of the time before isn't going to work right now. And that's not how trading or risks and odds and everything work. So I just wanted to start with that. To look at data, you could also, if it's not on your brokerage, you can check the SPX chart on TradingView. That should work as well. But yeah, you'll see what I'm saying. You could look at every single market downturn, especially when we open and close outside of the lower Bollinger Band. That's exactly what happens. We end up retesting on the 3rd day, close to the equivalent of 379 on the SPY. And it's never happened in history where we don't end up retesting it, especially after being this, overextended to the downside. That's what I want to share so far. That's why I'm leaning long. It's, what's pretty cool is that towards the end of the day, we got into scalps at 371-ish, 370.5. And then we rode those up. They were up really, really nicely within like 20 minutes. We rode those up to 375. But yeah, so we averaged down at 370. We averaged down at 375, and we entered our initial position at 378. So that's we have a pretty solid trade going on. But I mean, it is what it is. If it doesn't work out, it doesn't work out. I'm completely okay with that. But those are my reasonings. And yeah, man, I mean, I've traded the COVID crash. I've traded through some of like bad market crashes and market downturns during the teens as well. But yeah, I mean, this would literally be the worst downturn in trading history. And I mean, in hindsight, it makes sense. We could, but that's why it's very, very important in trading to always manage your risk, to never overextend yourself in capital at all. And just because, someone is saying something, or just because you feel a certain way, you should never, ever over allocate your capital, because trading is an infinite game. It goes on forever. And the only way to partake in that infinite game is to have money. Like you can't trade if you don't have money. So that's the main thing. But yeah, so there's that for the my overall. Right now, let's take a look at some of the indicators. So the first thing that I want to look at, unfortunately, I closed my technical indicators on both of these, and now I have this new garbage RSI on TradingView. I don't have the old one because I had to add the updated one. And I forgot the colors that I used for my MACD. So I'll edit that. But basically, what we see right now is the RSI, you can see, is flat. You can see right here the RSI is flat, even though we're having multiple huge red days. What that's telling us is that, so for us to become oversold, right? How much further abruptly to the downside does the market need to go for us to hit 30 on the RSI? So this is very, very bearish. And obviously also the MACD is very, very overextended to the downside. You can see how low this MACD is compared to every other time this year and every other time in 2021. So right here, the MACD is basically it's similar to where we were in the March 2020 crash. You can see right here, right? So obviously, it's not, there's multiple reasons to lean long, right? But then this RSI is very, very bearish. But what we've learned recently, especially when looking at the indicators, is that when the indicators are extremely, extremely bearish, that's also a very good sign to that it's not going to work out. Because when they are screaming bearish, right? Especially on the YouTube videos, if you guys have been watching, there's been instances where I say, wow, like the indicators look so garbage. Like it's abnormally garbage. This RSI is sort of similar to those other instances. So I would be careful about leaning super bearish. You're at this point, if you're bearish, you're basically either waiting for a flush down, or I mean, that's all it is. Because if the Fed did not bounce, right? So basically, this is my thought process here. The Fed wants a soft landing, right? If we don't bounce and the Fed releases terrible, they increase basis point, like they increase rates at a rate where it's not priced in, right? Then that would be very, very bearish. And that would just cause the market to be in free fall. So the Fed wants a soft landing. So a soft landing would entail, as we fall, we would need bounces, right? To rejuvenate our, short positions that we took profit on as they fell, right? So if you're a bear, and if you're the Fed, if you're a large hedge fund or bank, let me just make this very simple. If you're going short on the market, you don't want it to just go short. You just don't want it to fall, right? And the Fed wants a soft landing. He wants a market that isn't just going to cause mass hysteria, right? So the odds are in our favor that we have a bit of a bounce. And then basically this is going to be an opportunity for us to load back up into puts, all right? Because it just doesn't make sense for us to continue falling. It doesn't make sense for us to, because if we fall from here, then where are we going to? We're just going to fall straight to like 365, 360. And then that's not really a soft landing. That would be this would literally be the weakest instance in market history if we did not bounce. Well, not market history. I mean, back to 1960. This would be the weakest instance of overextension to the downside that we've seen, that I've, looked at from 1960 to today. So I am banking on us having a little bit of bounce. So yeah, essentially there's that. We can see that we opened and closed outside of the Bollinger Band yesterday. The ES, so the SPY futures actually opened outside of the lower Bollinger Band today, right? And you can see that we closed on the SPY outside of the bands again. So this is very, very crazily overextended to the downside. And we can take a look at the weekly chart of Apple. We're opening and closing so far outside of the lower Bollinger Band. It's obscene. We've never seen something like this. That's just one example of something that I want to share with you guys. Let's take a look at the NASDAQ real quick. So the NASDAQ is obviously also very, very weak. Very similarly, this RSI just doesn't want to become oversold. Very similar to what happened with the SPY. Tesla was phenomenal today. Tesla was very, very strong, which caused that periodic. We had that little bounce to 376 intraday. It was because Tesla had already broken its high of days. So it started lifting the NASDAQ, and it started lifting the SPY and the rest of the market. And you can see this MACD is also very, very overextended on the NASDAQ. So we are at January 2022 levels. And if we go back to the March, let me make a line. So on the NASDAQ, you can see that right here, we're touching, right? The MACD is more overextended to the downside than it was during the COVID crash, and also than it was during January 2022. So, I mean, again, guys, like, we're in historical weakness. So when it hurts the most, that's when it's usually the best idea to go long. So, yeah, I mean, I hope I'm making sense here, because this sort of play has basically played out multiple times while I had the Discord open. And the first time was my biggest trading day of the year. The second time I also made a lot of money, but both times it just didn't make sense to go long. Everyone was super, super bearish. And our move upwards looked algorithmically driven. It didn't even look like it should have happened. So that is similar to what I think should be happening this time around, because of how overextended we are on multiple different indicators and everything. It's just obscene. So I'm banking on a bit of a bounce. And if it doesn't work, it doesn't work. But that's what I'm looking at. So there's that for the SPY and the NASDAQ and the overall stock market, right? We don't need to really look at the Russell. The VIX is obviously going to be spiking, so it's not really that important either. But I want to take a look at the crypto market. So we are very overextended to the downside on Bitcoin. We're oversold on the RSI. We're trading outside of the lower Bollinger Band completely. And this is attributed to a few things. Obviously, number one, the overall market is weak. Number two, everything that happened with Luna and the public perception of crypto as a whole. There were hedge funds, there were VC funds that staked hundreds of millions of dollars of Luna, and today they're only worth like $100. They're only worth like $500, $600. For one example was one company staked over $550 million, and right now their holdings in Luna are $550. So there has been a lot of people that lost a lot of money, and the public perception of crypto recently, because of that Luna scare, caused us to fall even more. The other things that people are really, really worried about is that Michael Saylor, so MSTR is, I mean, there's, I didn't look at the exact number, but people are worried about MSTR getting liquidated. But then even more importantly is Celsius. So Celsius is a $10 billion company, and they have a liquidation price at $15,000 now. So essentially what is going on right now is there's a lot. So there's like, it's basically like a battleground of billionaires at the moment. And if I know that if Bitcoin touches a certain price, you lose a lot of money, then me and all of my other rich friends and companies and people that I can persuade to take you out are going to deploy capital to make your position screwed, right? So, and this is a game of like, this is like a high level game. You're involving people in different companies, you're involving different products, you're involving different exchanges, you're involving different wallets and countries and people in different parts of the world, different industries. You might be, there's so much to go to this, but it's a game of billionaires, and they know that there are certain liquidation prices that have to be met for these companies to lose a lot of money. And if these companies get liquidated, it gives an opportunity for new companies in the same industry to come as well. And while all this is going on, Bitcoin, Ethereum, the rest of the market is taking a hit because people are scared of what is going to happen once these other companies get liquidated. That is the main reason why Bitcoin is falling so heavily and sharply and there's no real bounce in sight. It's because everyone is waiting for the cascading liquidation event that is essentially... So usually when there's like a cascading liquidation event where like the market is just like free falling, there's no orders in the order book. Like the order book is spread completely thin, right? So it can easily fall very, very sharply and abruptly to like 10,000, to be honest. It can fall down to 13,000, 12,000, 13,000. Easily. But it can easily bounce back up. But what my point is that as these companies get liquidated, there is a very, very high likelihood that a lot of other people get liquidated as well. And that causes a big dramatic shift in public perception of this, the crypto space, as well as literal dollars lost of people that invested in the crypto space. So, I hope I did a good job explaining a few things in today's video. I hope you guys enjoyed watching it, and I will see you guys tomorrow. Thank you.